Okay, let's just pull out. I have the standalone number, and what is the standalone number on the net profit? It's 785 crore. That's the only number that I have at this point in time. The standalone net profit of 785 crore. Rima, is this the number that we are looking at?
785 would be slightly better, but I think I would look at it on a consolidated basis. So let me just try awaiting the actual numbers. So, okay, we've got 785 is not the standalone, Anuj. It's coming at the consolidated basis.
Okay, that's the consolidated number. Yes.
Yes, and that is actually better than what the street was.
So I'll tell you the income also. 6615 crore, 6615.5 crore.
Okay, could you repeat it? 16?
No, sir. The income from operations has come in at 6615.5 crores. That is the income that's come in.
Okay, so at least on the bottom line, it's much better than what the street was anticipating. It's turning out to be a growth of 16%, which is a lot more than the 8% that the street was anticipating. On the top line, it's very slightly better than street expectations at 6,615 crore. It's a growth of nearly 5.1%.
Other income has gone up big time, Rima. It's gone up to 174.5 crore. From quarter on quarter, it was 43 crore.
So that could maybe be the forex element.
So the forex element is actually a loss of 9 crore versus a gain of 93 crore. If you're looking at the total other income, it's 165.8 crore versus 136.6 crore.
Okay, so I'm not too sure what the other income component could be, and that is clearly boosting the, at least in terms of the profitability. Let's await what the margin is. So I'm just trying to calculate that. So it's 903 at the EBIT level, and that's largely in line with street expectations. So the company's delivered an EBIT of 903 crore, and that turns out to be about margins of 13.6%, and this would be in line with street expectations. So on the rupee revenues, in line with expectations, 5.1% QOQ growth, margins at about 13.7%, again in line with consensus expectations. As Anuj pointed out, it's the other income which has clearly boosted the profitability, and therein lies the bait. But again, for Tech Mahindra, the two key parameters to track, one will be the dollar revenue growth, because that's been disappointing for the last 2 quarters. And secondly, the street wanted to see an improvement in margins. Yes, there has been, if you look at it on a quarter-on-quarter basis, but that ties in with the kind of recovery that we've already seen in the stock. The stock has recovered 100 rupees already.
Just one word before I toss it back to you. On the other income, it includes 32 crores, which was an estimated excess provision for contingencies provided earlier by Satyam, Satyam. So that's for earlier year. That's been written back. So that, I think, is a number which we can safely remove while looking at the operational number.
So that's a $39 million provision.
32 crore.
Oh, 32 crore provision.
Yeah.
Okay, anyway, that largely explains the beat that we're getting, because it's beating our expectations by roughly about 50 crore, of which partly is explained by forex, and about 30 crore is explained by other income, but that's a one-off. It's not going to be a recurring benefit that the company will get. So largely you would say the numbers are in line with expectations. Don't expect this, at least going by prima facie, don't expect the stock to do too much, because it's already recovered from lows of 450 thereabout in July, and it's risen about 100 rupees to now 550. So it had factored in an improvement in margins, which we've already seen. Now the only number to await would be the dollar revenue growth.
All right, well, let's get one comment in. Sarabjit Kaur Nagra joins in now from Angel Broking to give us the view. Sarabjit, what is your response to the earnings from Tech Mahindra?
Yeah, broadly looking, whatever I've seen so far looks that the numbers have beaten expectation, and be it revenue numbers, rupee revenue, I assume dollar revenue also they will be beating up. And even net profit is better than expected. Even if you remove, I think, the extraordinary that you have pointed out, I guess still there is a huge upside in terms of net profit, and also margins have been at least better than our expectations.
Okay, I think we have the dollar revenue number. That should flash in a bit. As of now, I mean, the Q2 dollar revenue, if I'm not wrong, is $1,011 million. That compares to $989 million.
Okay, so
for the quarter.
1011 is
Yes.
bang in line with street expectations. That would be a growth of about 2.1, 2.2%. Our street, the consensus poll was 1010. So compared to that, it's 1011. So that's bang in line with street expectations. So roughly, I think these would be largely in line with street expectations numbers. Some internals that have gotten hold of, the utilization is inched up to 77% versus 74%. So that's driving the margin the margin improvement to the tune of 160 basis points that we've seen. So that is one aspect. It's America which is driving growth yet again. So we're still trying to calculate what the growth of America will be, but America is clearly one driving aspect. It's
so the attrition rate has gone up a tad bit to 20% versus 19% last time around. So that's something that you need to look at.
And I think they have also added 150 million plus client, Rima. It's gone up from 13 to 14. The largest of the client size, over $50 million, that's gone up from 13 to 14. So that's what we have at this point in time.
Right. Ravi Menon of Elara Capital also joins us on the phone line from Mumbai. Ravi, the EBITDA margin, or the EBIT margins rather, are bang in line with expectations at 13.66%. How did you read into the numbers, and what do you expect the stock to do here on?
So my expectations were actually slightly higher. So I was expecting 13.85% in EBIT margin and dollar revenue of 1,020 million. So 1,011 is a disappointment on that score. But yeah, margins are actually pretty good. I think the margin recovery that we had expected, that's happening at least. And revenue, hopefully, they'd make more positive commentary about the second half than what we've seen from both TCS and Infosys, hopefully.
So is there anything in these numbers that will provide an impetus to the stock? Because, the stock is down 15% this year. Anything in these earnings that can cause a rebound?
I don't think so, because the revenue growth is still tepid. I would say 2.2% is nothing to really cheer at. And we were looking at close to 4% in constant currency terms. I was looking at 3.2% in dollar terms and another 60 basis points cross currency impact affecting it. So that compared to that, this is a letdown against expectations. So I think, I don't really expect a positive reaction to this result.
Okay. In constant currency terms, Rima, the revenue is up about 3% quarter on quarter, and in dollar revenues up about 2.2%. Any more details that you have?
Well, prima facie, these look like in line with consensus expectations. Some internals, it's America which is doing very well for the company. Remember, America drives about 49% of the company's overall revenues, and that has gone up by 4.8% QOQ, adding on to the 5.6% growth that it saw in the previous quarter. So America is the growth driver for Tech Mahindra. Europe continues to grow subpar. Even in the previous quarter, it had a negative growth. This quarter, it's seen a growth, but it's only a little less than 2%. So it's lower than the company average, and that maybe could be explained because of BT or British Telecom, which has been under pressure. Rest of the world has contracted for the second straight quarter.
The new client, the client that I was talking about could be Nordic, Rima. That's being explained in the key wins that you have in the press release that the company has sent. There's some quote from the CEO as well that will flash on the screen, but as of now, what would you say? Tomorrow morning, what should the stock do?
Well, I don't expect too much of a reaction because these are in line with expectations. Yes, the stock is an underperformer. It's the biggest loser on a YTD basis in the IT pack. Its valuations are attractive, but these numbers were factored in considering the improvement that it's seen from the early, at least June, July lows. So the improvement that we've seen in dollar terms, 2.2%, some margin improvement has been factored in by the street. So I won't expect too much of a reaction. One disappointment has been manufacturing because manufacturing this quarter has contracted by 0.2%. And in the conference call that the company held in, at last quarter, they indicated that manufacturing is expected to be a strong vertical, and that is not played out. So that is a bit disappointing. Even on utilization, it's been the key growth, it's been the key margin driver for the company, improving to 77 versus 74%. And that also was something that the management had alluded to.
I'll have to interrupt you here. Gale's numbers also flash.